Joining us to talk more about the economy, the Fed, and the financial markets is Roger Ferguson. He is the former Federal Reserve Vice Chair and currently President and CEO at TIAA. Welcome. Nice to have you with us tonight.
Thank you very much, Sue. A pleasure to be here.
That was a very positive survey that Steve Leisman just laid out. Give us your overall view of how you see the economy and the market.
So I saw 2019 as a year in which the economy slowed, and as you've just pointed out, the markets tended to rally and do better than many of us had thought. There's a risk that 2020 might turn slightly in a different direction. So the optimism Steve talked about may hold up for the economy itself, where perhaps growth starts to pick up in the U.S. and maybe other parts of the world as uncertainty recedes, particularly around these trade issues. On the other hand, the climb may be a little harder for the markets because they have been rallying so much for such a long period of time. Don't expect to necessarily to see a dramatic drop-off, but I would say this is a time maybe to expect that the increase in stock valuations may slow a bit from the torrid pace that we had in 2019.
I think it's pretty safe to say right now that interest rates aren't going anywhere in 2020 for the foreseeable future. After last week's meeting, Jerome Powell made it clear that they don't plan to do anything at least through the summertime of next year. But do you worry, going back to your days as vice chair of the Fed, do you worry that these prolonged periods of low interest rates, while they're good for borrowers, they're not good for savers? You're head of TIAA now, the retirement services industry. People that rely on retirement income sometimes have to reach for that much more risk to get that income through the door.
Well, I think the answer is, in these times, the secret for retirement savers is to think broadly about diversification. So you want to have a retirement saver clearly wants to have some exposure to the equity markets because that has continued to go up. In the fixed income space, maybe thinking much more about focused on income, part of the fixed income story, as opposed to expecting interest rates to change and move in a positive direction. And more importantly, thinking about alternative asset classes, real estate, agriculture, timber. So the answer for the retirement saver in a period of low interest rates is think broad diversification. And that's not necessarily the same thing as chasing risk. It's really perhaps spreading out your risk a bit more by thinking about different asset classes that have different cycles.
You have also been a big supporter of what's called the SECURE Act, which Congress has prioritized. Tell us why you think that's important as we talk about people in retirement.
Well, thanks for raising it. Yes, I and my company and many have been supporters of the SECURE Act. Part of the spending bill that was passed today by the Senate and hopefully soon will be signed by the President was the SECURE Act. It's really important for retirement savers because it allows them to get an annuity in their retirement plan, which then gives them the opportunity for guaranteed income for life or a private pension. It makes those annuities a bit more portable. And importantly, it allows individuals to understand how big savings they can expect out of the nest eggs that they put aside through an income illustration, as it's called. So there are a number of components about the SECURE Act that I think would be very welcome for individuals and businesses who are thinking about saving successfully for retirement.
And we will be talking much more about that with you, I think, in the future. Mr. Ferguson, thanks very much for joining us.
Sue, thanks so much for having me on.